I'm going to show you guys what the difference between my 2023 policy is versus my 2024. Please take into consideration, we've had no accidents and we have had no tickets in the last year. So this increase that you're about to see is wild. It says $224. This is before I got the rideshare endorsement. So I only recently got the rideshare endorsement. As I said that I need to stop playing around with this. I need to make sure I'm safe, and I got the rideshare endorsement. But this is between me and my wife, right? So we have two cars in the household, and we pay $224 every month for our car insurance, not including the rideshare endorsement. So I called them. I said, hey, I would like to get a rideshare endorsement. And I told them to charge me for it up front, right? So if we do 430 minus the 224, we get $206. There were 2 months left in our insurance before it would restart. So I told them to just charge for the 2 months up front. So $206, it was the cost for a rideshare endorsement for 2 months. So we would divide that by 2 to get the monthly rate. So it's an extra $103 for the rideshare endorsement for me through Progressive. Where you live is going to play in a role. Your race, your gender, your driving habits, those all things play a role in insurance. Your income level, your zip code. So, what I pay isn't necessarily going to be what you pay, but this is a lot cheaper than I thought it would be. But we recently got a new quote for our future riding, our insurance, and it's going to be $496.22. It's really high, really high. My wife told me that there was like some news circulating that insurance companies, period, not rideshare insurance companies were thinking about pulling out of South Carolina because of, I don't know what's happening. I don't know if it's because of robberies or more accidents. So the way insurance works by, think of it like betting. There is a company out there and they are betting that the amount people are paying for insurance will be more than the money they have to pay out for insurance claims. And that's how they pick their numbers. They have these smart people in accounting come out with actuary tables to say they make $1 million from passengers and they spend $800,000 fixing claims, and then they profit $200,000 in their business. So that's technically how it works. So in order to ensure that they're remaining profitable, their numbers have to adjust for inflation and adjust for claims, right? If claims are going through the roof, then they're gonna have to increase their pricing. Now during COVID, insurance got cheaper because there were less people driving. Less people driving means less accidents, means less claims. So now that more people are back on the road, more people are driving, traffic is up, people are in their cars, these amounts are increasing. So, and the increase won't happen blanketed across America. It's gonna be based off of your state, your zip code, the kind of car you drive. In fact, let's pull up top states with increased insurance 2024. So let's see if we can get a quick rundown on what states are gonna feel it the most, car insurance. So this one is talking about Nevada specifically. It says insurance prices in Nevada will leap 28% in 2024. Oh my God. The largest increase in the nation. Washington state will see the second biggest increase at 18%. Inflation has cooled in the second half of 2023, but prices for car insurance continue to increase by record amounts. This was written 4 days ago. Let's click into this and see what they're saying. The average rate increase across all states is 13% in 2024, up even more from 2023 when the typical price hike was 11%. Now, I'm above that 13%. I feel like I'm in Nevada. As you can see, they have a little heat map here with the percentages. I'm in South Carolina, so Georgia's going up more than South Carolina. Texas is going up. Nevada's going up. Not quite sure. I think Arizona's somewhere in here. Geography was not my thing. New York's not too bad. Maine is up. I think this is Washington. This is Oregon. I have no shame if I'm wrong. I'm surprised California is not going up. So for those of you who are watching from California, here's like the one time you're not getting screwed. Texas is going up, which, that's weird. Florida's going up. They can't drive down there. Every state is expected to see a rate increase of at least 5% this year, except for Colorado, Hawaii, Idaho, and North Carolina. I'm so close to North Carolina. Why can't I just get their rates? Other states with substantial increases this year include Arizona, 17%, Connecticut, 17%, Louisiana, 16%, and Georgia, 16%. The average car insurance has increased 29% overall since 2018. with a 25% jump in just the last 2 years. So as rideshare drivers, we have to be aware of this. Me, my wife, and I, what we do is if our insurance prices jump, we don't just accept it and stick with the same company. We go through a broker. Our broker will give us several different pricing options from various insurance companies, and that's what we're gonna do again. And I'll report back with how much money I might be able to save or not. But this is important stuff, man. Like this, I'm kind of blindsided by this. And if I wasn't on top of like my bills every month, my wife and I we plan our bills. We go through what our statements are saying and we plan it out. And if we weren't in that process of being on top of our finances, the 25th of February would have came, we would have gotten auto renewed into that policy, and then we would have been looking at each other like, what's going on? Whenever your insurance is up for renewal, shop around. And I shopped around and I went to 2 places, and all of these quotes are with rideshare endorsements added on and are for 2 cars. So here is the well balanced 12-month policy, $356, which is cheaper than what Progressive is trying to charge me at the almost $500, but still not the cheapest I could get. And I can go to the over here and pick the lower premium one, but these don't have coverages that I think are important. Both of our cars are paid off because we don't have a loan on the cars. We can pick a selection to where if we get into an accident, they won't replace our car. It will make the insurance cheaper, but we're not going to do that. I think there's enough value in paying more money in order to make sure that if we get into an accident, that they do cover the cost of our cars. I think that is important. We both drive 2019 cars, so it's not like we're driving cars that are only worth $2,000 that we can self-insure. And in that scenario, I would reconsider. But in this scenario, my car is still worth almost $8,000 to $10,000. Her car is still worth maybe closer to $12,000 to $15,000, and that's pretty significant. In that, if we get into an accident, I would want that money so that I could go and buy another car. Now, if I had enough money to go and buy another car, which means I am self-insured, maybe I would consider it. Maybe I would think about it, but I'm not at that stage, so that's just not an option for us. $356 over the course of 12 months. $3,771. It's not bad. It's more expensive than what we were paying before, but definitely cheaper than what they're trying to charge us with. So one, off the bat, I'm glad I looked at this option. So let's look at this other option from Allstate. Allstate's pretty cool. I'm gonna hype them up a little bit. They're pretty cool. I'm probably gonna end up going with them. So there's one caveat though, and I'm starting to understand the caveat here. So this is what the custom rate would look like. This is to make sure I have minimum insurance plus the ability to recoup losses if I get into an accident on my car. So they'll pay out the value of my car if it's totaled. And then I also have the rideshare endorsement on this. And this is going to cost $148 per month. Now, you might be thinking, Tristan, that's too good of a deal to be true. You must be lying somewhere. And I'm not lying, but what I've learned is, let's see, in order to, here it is at the bottom. Let me see if I can zoom in some more for you guys. Yeah, let's get it nice and big. So here at the bottom, the monthly payment is $148, but the upfront payment is $735. Now, I did chat with support. He said that this is, I wanted to, they're requiring us to pay 50% of the policy up front. So I asked him, my wife wanted me to ask him. I asked him why. He said, this is common for everyone in South Carolina. I think that the reason why this policy can be so inexpensive is because they're requiring a 50% upfront payment. I think South Carolina has an issue where people aren't paying for their insurance, and that's why maybe the prices have been increasing. So I think that by having a high level of starting with the 50%, it creates a gateway to where probably the type of people who insure with Allstate are people who are, let's be honest, the more well-off areas you are, the less prone you are to be in an accident. I don't know why it works that way, but I'm not saying it's causation, but that is the correlation. So that's why your zip code can matter when you're doing insurance. So $735 upfront. They only do 6 months policies, which that's something that's uncommon again. But because I know that mathematically we're required to pay 50% upfront, I know that if I see the monthly payment of $148, we'll call it $150. That means typically, if I didn't have to pay that much upfront, I would have to pay double that, which would be $300 a month. So this $300 a month is cheaper than what my current cheap policy is with Progressive. It's by a couple of dollars, not by much, but it's significantly cheaper than what they're trying to pay us uh, with the renewal. And it is also cheaper than Liberty Mutual. So I will be going here. And I want to show you the difference. If I did not do my due diligence and do my research, I would be paying $6,000 per year with Progressive. With Allstate, even though it's a 6 month policy, if we do the math and stretch it out to a year, it's like $2,000 and change. We're talking about a 75% difference in the amount of money I would have to spend if I didn't do my due diligence and check on new insurance.